So today we're doing something special. We're going to be discussing the charts that we should all be thankful for as we head into Thanksgiving 2024. Now, with the market up so much, of course, there are plenty to choose from. But these specific ones are the most responsible for the type of advance that we've had this year. And if any of them falter into 2025, of course, the trading environment and the trend will look a lot different. So without further ado, let's talk about some Thanksgiving charts. Now, we're going to start with the S&P 500, which of course is our focus every week. We're going to expand analysis beyond that because, of course, there is a lot going on under the surface and around the S&P that we need to talk about. So S&P 500, 6100 target. You still haven't achieved it, but it's getting closer, right? And we've talked about this chart all the time. And again, very important because if we didn't have that breakout from a huge pattern, we never would have had this upside target as something to shoot for. And we know that, it took a lot to get there, right? The market topped in late 2021. We had the bear market in 2022, bottomed in October 2022, came all the way back. And again, more than a year later before we got to get back above that prior high in your 4,800. That breakout occurred. The measure move has been 6,100. Now, the most important part of this particular breakout was the initial stages. That breakout was immediate, which allowed a cushion to form, of which the S&P could then back and fill and form new bullish patterns along the way, which of course we pay attention to all the time. There's been 10 successful breakouts, 10 pattern targets achieved since October of 2023. And there's still more to be achieved, right? And so if we take this one step further, we can tell that over the last few weeks, of course, it's been really relatively straight up. We had some pullbacks along the way, but nothing that has been able to form the next substantial bullish pattern. So the only way from our work to get a very high upside target from a breakout, we just need to see more volatility take place, right? We saw it in October, we saw it in August, we saw it in March, in April as well. We don't have a pullback of say 6 to 10%. We can't get an upside target from that point either. There's been smaller ones along the way, which have worked just fine. We saw it all the way through here and of course, over the last few months. So if and when a more material pullback does occur, we have to look at it from two different angles. One, yes, could it be the end of this entire bull run? Of course, but it could also then lead to another consolidation phase, which can then turn into constructive bullish formations, right? And that's the thing we have to look at into next year. And so one of the reasons why these have worked so well, of course, is because the environment has supported it, right? The moves have been small for the most part. We've had very few 1% moves, which we talk about all the time on a rolling monthly basis. If we look at 2022, we know there was an historic amount of them, nearly 130 for the year, right? That's more than 10 per month, which of course leads to the type of treacherous trading environment that we had in 2022, which made it difficult for bulls and bears because the whipsaws were so severe. That changed in April 2023 as the second quarter began. As you can tell, even though we bottomed in October 2022, things didn't change from a two-way volatility perspective until the number of 1% moves started to drop. And that has continued all the way to 2024, aside from August when the month started with 3 straight 1% declines. Then we had 7 1% advances. So again, it's really strong move down, V bottom, straight up. But since that point, we got back to this sort of more calmer trading environment. So as we can tell here, 66 1% moves in 2023, even fewer amount in 2024 so far. So what does this tell us? Well, in 2024, again, we just said the fewest amount of 1% moves overall. That leads to a strong market. The greatest difference of 1% gains versus 1% losses. That shows how one-sided this market has been compared to last year. The most months with more 1% gains and losses, right? Of course, when you win the month over and over again, tend to have a good year. And of course, so far, that has resulted in the best year-to-date gain as well. Now let's look at the S&P versus the 10-year yield in US dollar. Because as you recall, from 2022, when both of them, the yield and dollar, started to shoot higher, it really jolted the equity markets, right? And those advances, of course, are very strong and really nonstop all the way until September, October. And along the way, the S&P, of course, fell nearly 30%. When that changed, the market environment changed as well. Now, considering what the S&P 500 has done since that time, if we didn't know anything about 10-year yield, the US dollar, we just knew the relationship of what happened in 2022, we would think that both of them have continued lower the entire time. As you know, that did not occur. And so we can see this distinct differences here. We had the dollar and yield start to move up. S&P at first did not respond, but eventually did give in, right? Fell 11% from the August high to the October low, 2023. But in 2024, completely different, where we've had two different times where the dollar and yield both started to rise for weeks and months at a time. And what has happened since that point? S&P up 14% during that initial lift. Then again now, between 11 and 12%, right? And so the question is why? There's not a lot of good answers for this, but at the same time, this was a shock to the system. Not only did this move up at an accelerated pace, it got to the point where we haven't seen dollar, especially the 10-year yield, get up to 2%, 3%, 4%, almost 5%. And the dollar, of course, swing higher as well. So it was a combination of things, moving higher at an accelerated pace. And more importantly, we just haven't been used to the yield and dollar at those levels for the most part. Now, it's been really a trading range, right? So the market, the S&P has proven that it can rally with a rising dollar, with a falling dollar, with a rising yield, and a declining yield. And most of the reason, or one of the main reasons, is because it stayed in this range, all of them. We've seen it before, haven't made new ground. Now, both of these advances continue. The yield continues higher through 5%, 6%, even higher. If the dollar now, testing 107, gets to 108, 9, 10, then I think you'll see a difference. But right now, as long as we stay in this range here, you can see that the S&P has been okay with it. NVIDIA, told you we'd go beyond the S&P 500. So we know all about it. But there are two charts here I think are important. Number one, this is a weekly log scale. NVIDIA, if nothing else, has continued to ride the uptrend. Now, the difference recently is that it hasn't been able to bounce in a very strong way from the line compared to what happened in the very beginning stages, right? The initial bounce in beginning stages of 2023 led to a massive gain, tested it again here, another strong gain to begin the year, came back down, big move once more in the summer months. But since that point, even though we've been trending higher, still haven't really blasted to new highs once more. And again, the rate of change could be slowing. That's something we have to pay attention to as we go forward. Now, the other part of this is that uptrend, once more, has been defined by a series of breakouts along the way. Now, this is a log scale, but it's very easy to see that you have long periods of back and forth movement, ends up forming bullish patterns. Those bullish patterns have been broken out from, and you see how strong and how immediate those extensions have been along the way. And again, once more, we did have a breakout, again, over the last few weeks, but we still haven't gotten to the point where you're extending beyond it. Now, we know at some point this is going to change, but if we see a failed breakout here, that could tell us that NVIDIA's market character really is starting to look different. Now, the question from this point, of course, is how much influence does it have on the market in general? We know the S&P 500 is still making new highs. We know NVIDIA and many of the semiconductors within the SMH will look much worse. And so when we have the SMH right now pulling back and NVIDIA not doing as well as maybe it could, with the S&P still being able to percolate near its highs, it's a good sign. We know that there's been other areas like software doing better. So we need to see some sort of rotation both within technology and outside of it for the market to continue to move higher without one of its biggest and most influential names potentially slowing down into 2025. So Bitcoin, there's plenty of ways to look at this. We know it's making new all-time highs, got very close to 100,000. Now, along the way, pays very close attention to technicals as well. And so two charts here on Bitcoin. Number one, we know what happened last year. We know about positive seasonality in the fourth quarter for Bitcoin. We got that breakout in October 2023, that really took off really until it topped in March, right? Just above 70,000. And we know coming into that, It was right before the halving, and we know about the 12 months before the halving and 12 months after. Historically, over the last 10 years has been some of the best times for Bitcoin. So it's been, a lot of patience for people that expected that to continue higher, but now we have the breakout. So the question is the breakout that occurred, is the extension that we've seen now over the last few weeks going to continue to replicate what we saw in 2023 and go much higher through 100,000 and beyond? Well, if that's going to continue over the short term, what has to happen? We need to see more of the shorter term moves continue to play out, right? Whether it's an inverse head and shoulders pattern, a falling wedge, a flag, pennant, they've all seemed to work in Bitcoin's favor. And that's what happens when we've seen it. When momentum picks up, it must sometimes feels like a straight shot higher, but it's really taking advantage of these short-term consolidation phases and eventually rallying from there. So as of right now, 106 target, again, not that far away from a percentage basis. We know that the much bigger targets are way above this, but again, we can't really talk about them until we see all of these continuing to work, which so far it has been for Bitcoin. And of course, we can't talk about 2024. We can't be thankful for the year if it wasn't for utilities and how well XLU has done. And so going back to when the XLU started to be tracked here from 1999, so far this is the best year for XLU. No surprises, up 30%. But it has had some good 20% years in the past, but this is by far the biggest one. And the question is, what can it do for an encore? Now, we had talked about this and comparing it to the TLT earlier in the year, how it got so extended from it, thinking that TLT would eventually catch up. We know now there's been a lot more involved than just XLU being a bomb proxy, right? It's a power discussion, it's an AI discussion, and so this is really reflected in so many of those names doing so well and much different than what we typically see for utilities. We saw this reflected on the daily work as well. As we go along here, this is the Bollinger Bands, right? The top band is 20%, 2 standard deviations above the 20-day moving average. The lower band, 2 standard deviations below. And what typically happens when you have a market or an index or an ETF for that matter that doesn't trend that much, when you hit an upper band, it tends to lead to more of a slowdown. When you have a trending market that's very strong, what happens? When something hits the upper band like XLU did, it continues to move higher. It's happened now numerous times. We're getting back to the upper again once more just now. So we saw how much of an advance that led to from July all the way until topping out in September and before that pullback. Now we're at it once more. So if this is going to continue in the same way it has been, then it will continue to hug this upper Bollinger Band going forward. Now, on a longer term perspective, going back to 2011 here, we see that it has broken out to new highs many times, and we've had some follow through, but each time that follow through has been limited. As we can tell that each prior breakout zone was violated each time as well. And so that's going to be a real key to watch in 2025. Is this big breakout, this multi-year breakout that we've seen before, is it going to be stronger than prior ones? Meaning that, can we get an extension even further and the ensuing pullback be strong enough then to be supported above the last breakout zone? We're not too far above it right now. Had to go a long way to get here, but still within the confines of what we typically see with XLU, we have a breakout after a few years. And if it's like it has been in the past at least, we'll see that breakout come in. If things really are different, then this will continue higher. Financials, right? A huge part of 2024, and especially over the last few months as well. One of the major reasons, of course, is that we saw the breakout in 2021. We know everything pulled back from that point. That breakout wasn't just new all-time highs. It had just gotten the XLF back above its May 2007 high. So, of course, that's pre-Great Financial Crisis. And so this move here, huge, of course, but we're talking about breaking through 15, 16-year base. Don't like calling something that takes that long a base, but to the point where we're net flat for so long and obviously negative before that. So yes, it's extended from this angle, but XLF, let's be honest, has a lot of catching up to do to the rest of the market, to technology, even industrials, so forth and so on. So yes, this is extended, and we can see it here as well. What has gotten us here, right? Same thing with the S&P 500, a series of smaller bullish patterns being formed and breakouts occurring each time. And so if this is going to continue like this, of course, in 2025, what do we need to see happen? All of these consolidation phases, well, not each one of them, but most be resolved to the upside. Of course, if that changes, then of course things will change as well. And one last way to look at this is a weekly chart. So the big breakout, target still 55.50, and it's been just a series of bullish patterns, or we can call these trading boxes. If we zoom out to the weekly chart here as well, with potentially what just happened over the last few weeks being the next trading box to be formed. And lastly, small caps. As we know, spent a lot of time trying to come back this year, and it didn't really happen until July. And that, of course, was cut short as well. So we had to wait until this most recent reaction right before the election, and of course, much more afterward, to finally get it back and break out to new all-time highs. And again, this isn't any different than we've seen before either. Sometimes it takes us time in catching up. We've seen it now 3 prior times. We're talking about it here, potentially getting back. Said we wouldn't be surprised if we got that breakout. And we've seen other times when IWM has extended for months, for years after breaking out as well. So reason to believe the same thing could happen now. But on a relative basis, a lot has to change still to believe that IWM and small caps can continue to outperform the S&P 500, because again, we're going back 15 years worth just about, where we haven't had a new high or even a higher high with this relative line, IWM versus S&P 500. This is a potential here. Higher low from this angle, a lot more has to happen for that to occur. So yes, it's fine to be an IWM and participate in the breakout. Just realize if this relative line doesn't change much, then versus the S&P 500, we're still losing money, or at least opportunity cost along the way. That's what we have for today. Don't forget to check out these charts and subscribe. And most importantly, have a very happy Thanksgiving. Talk to you next time.